It's about that time of day again. My name is Joseph. Tuesday evening, December 4th. Welcome back to your nightly newsletter. I help new traders just like you earn consistent profits using a simple three-step trading strategy. And my plan this evening is to identify the best locations to look for our favorite entry patterns in the markets tomorrow morning. And I'm covering crude oil, S&P, Nasdaq, gold, and euro. Starting off this evening, oil is bearish with a spike and channel pattern tonight, and my plan is to look for selling opportunities up above the high of that channel, but I've really got my eyes on a hidden channel waiting just overhead. The S&P is bearish with a strong move lower, and anytime I see this much movement in one trading session, I'm expecting to see a trading range the following day. So the plan is to fade those bull breakouts, and I'm watching those two try patterns on the E-minis tomorrow. Nasdaq is also bearish, also with a strong move into a spike in channel tonight. And my plan is to look for entry patterns to sell above the high of that channel. And remember, anytime we see a spike in channel, we look at the base of that channel. So you want to stay tuned for the Nasdaq analysis in just a few moments. Gold is bullish with a spike and range tonight, and that tells me to look for buying opportunities below the range. And of course, I've got my eyes on the two-try failure pattern for those gold buyers tomorrow. And of course, the euro is bearish and back inside yesterday's trading range. And with such strong momentum for the bears, I'm expecting one more attempt to go lower. Then we can start looking to buy with seller failures tomorrow. Well, most of the U.S. markets may be closed tomorrow for a day of mourning, but that's not going to stop us from identifying the best opportunities for Wednesday and Thursday's trading session. We're going to hold breakdown for you in just a few moments. As always, got a great newsletter in store for you guys and gals tonight. Plenty of opportunities setting up on a couple markets for tomorrow and the rest for Thursday's session. But before we get into those charts tonight, I got to remind you, make sure you never miss a video by joining our mailing list. You can find the opt-in form right at the top of our blog here at Sideways Markets. Give me your name and your email address, and I'll shoot you an email every time this nightly newsletter goes live. Also, if you're not joining us tomorrow in the trade room, the next best option is to download all of the charts from tonight's video. Remember, you can download all the charts that I cover in tonight's video. There's a big white button right below the video tonight on our blog. And don't forget, if you have any questions about anything covered in this video tonight, please remember you can post them in the comments section below, or you can always pick up the phone, call that toll-free number, or use that live support tool in the right-hand side, upper right-hand side of the website. And as always, if you like what you see tonight, please help support this channel by subscribing. And when you do, hit that bell icon so you get notified every time I post something new. And as always, it is awesome to be here with you guys. Had a great day today, expecting another great day tomorrow. But let's not waste any more valuable time getting ready for tomorrow's trading session. Let's take a look at the economic news calendar. Now, most of you have probably already heard tomorrow, Wednesday, December the 5th, has been declared a national day of mourning. Banks will be closed. Most federal staff will be off for the day. Flags will be at half-mast. I'm sure all the cable news channels will be broadcasting the ceremonies from Washington, D.C. Now, over the last couple days, there's been a lot of confusion as far as which markets are open, which markets are closed. And I swear the exchange websites, they do whatever they can to make it as confusing as possible. Let's break this down, though. For tomorrow, the markets that are open tomorrow, futures markets, these are U.S. markets only, right? So I'm not talking about markets that are trading on the European exchanges, right? The Eurex, the ICE, right? These are U.S. markets. So CME, NYSE, Nasdaq markets, right? So pretty much the markets that are open are only going to be crude oil and gold for tomorrow. Those are the only U.S. markets that are open. Now, that doesn't mean they're going to be great trading markets because we've got the equity indexes, right? The Nasdaq, all the E-minis are closed tomorrow. The bond markets, the big one is the bond markets. The bond markets are closed tomorrow as well. Obviously, the stock markets are closed, right? But we're futures traders here, right? Now, What they have not closed, and I'm glad they did this because you don't want them closing crude or gold. These are 24-hour markets. Those will be open electronically from what I can tell on the website. Again, I swear they make it, you have to have like a PhD in Fed speak, right, to be able to interpret these websites sometimes. And even after reading the announcements the last couple days, from what I can tell, you will see crude and gold moving. But this is one of those times where you got to really be careful tomorrow if you plan on trading either one of these markets. I always recommend when the banks are closed, when the kids are out of school, right, we are out of the market. Yes, we may get some opportunities if you're going to trade tomorrow morning. Again, all the other part of the world, right, all the other markets that are not in the U.S., right, they'll be open tomorrow. We get some news tomorrow as well. But as far as U.S.-based CME markets, NYSE markets, right, and Nasdaq markets, all we really have tomorrow are crude and gold. Everything else is going to be closed. So tonight, I'm going to put together the plan for all of our favorite markets, knowing that crude and gold are the only ones to be moving tomorrow, and the rest of them are going to have that standstill, right? The last time we saw a standstill during the week, I believe, was back with Hurricane Sandy, right? Back in 2012. That was the last time. Before that, it was 2007 for President Ford. So this is going to be unprecedented for a lot of traders, right? A lot of people haven't seen a situation like this before. So I would caution you heavily. Please trade with caution over the next 2 days, right? Tomorrow and, of course, the day after. If you have any questions about this, call your broker, right? Your broker will be on red alert over the next couple of days because the last thing your broker wants is for you to get stuck in the dead zone, right, when these markets are closed. Believe it or not, closed markets are some of the most dangerous markets because they create a sense of scarcity. If you want my opinion, take tomorrow off. Go see grandma, read your trading journal, do some replay testing, do something productive, whether it be personal, professional, right? Don't try to force these markets tomorrow morning. If you do want to trade crude and gold, get to it early because that's when the professionals who have no choice are going to be trading, and keep it simple tomorrow. Now, we do have some news tomorrow. Right? Not much in the U.S. session, but if you're in Europe, you get the PMI number at 4 a.m. coming out of the Eurozone. You get the retail sales number at 5 a.m. Eastern time. That will probably be the big news of the day tomorrow. I'm not too concerned about the Bank of Canada announcement at 10 or the merchandise trade from Australia. Most important news tomorrow is probably going to be that inflation number, Purchasing Managers Index. It's inflation at 4 o'clock and retail sales at 5. Those are the two big news events. The rest of the news that would normally be on a Wednesday have now been pushed forward to a Thursday. You'll notice on Thursday we come back, we've got a ton of news at 8:30 on Thursday morning. So get to your desk early on Thursday. Also, on Thursday morning, we're also going to be hearing OPEC. OPEC will usually make their announcement around 7 o'clock Eastern time. It's usually around noon, around lunch, right, gamut time. So be aware, when we come into the trade room on Thursday morning, we're going to be walking into, pardon the term, but a shitstorm, right? It is. Markets will be opening back up after being closed. You're going to have OPEC, right, making their projections into 2019. It's going to be a very, very chaotic beginning of Thursday. So my plan on Thursday is really to be very conservative. Get back in the market, see how we're doing. Again, it's whenever we have a complete missing day, anything that happens during that Wednesday, right? Anything, any news, any politics, any geopolitical, anything, now will have to be basically absorbed on Thursday morning. So Thursday could be, like I said, right, kind of a shitstorm, right? Because you've got everybody coming back in. You got some major news from OPEC, right, on Thursday. And of course, not to mention all the news from Wednesday is going to get pushed into Thursday. So Thursday, we got OPEC. Again, by the time we get to the trade room at 8 o'clock on Thursday morning, we'll already have heard from OPEC, right? So be aware of OPEC, right, oil on Thursday. Then, as you can see, as we go lower, we got the inventory report on Thursday at 11 o'clock as well for all you crude traders. So expecting to see a bit of a craziness on Thursday. Careful tomorrow, right? Easy does it on Thursday morning. I'm expecting to have a pretty good day on Thursday, but I'm expecting to have to tiptoe my way right back into these markets. These are times when you've really got to be careful. Right, you make a bad decision on Wednesday or Thursday this week, and you can easily give back any gains you've made for the last few weeks of trading. Right, it's that volatile, it's that dangerous if you're not paying attention. When in doubt, sit it out. And as always, we'll be together in our trade room, not tomorrow, but on Thursday morning, right, to make sure we do all of this correct. Okay, so now you've got the basic plan for tomorrow. Gold and crude are, again, limited open tomorrow for gold and crude. Be very, very careful, right? Try to force trades on that. And then on Thursday, right, bring your pooper scooper because it's gonna be a sloppy one, I would imagine, on Thursday. And then Friday is quickly becoming the big day this week. We'll see. We'll talk more about how Thursday goes in Thursday night's newsletter. No newsletter tomorrow night, right? Be back on Thursday night, and we'll get prepped up for Friday's trading session. All right, let's see if we can't put this plan together. Oil is open tomorrow. Well, from what I can gather, it says it's open tomorrow. I would expect it to be open tomorrow if it says so. But the bottom line is crude is bearish with a spike in channel, a hidden channel, and a measured move on the chart tonight. The bearish momentum tells me to look for selling opportunities at resistance levels. And of course, some of the best resistance levels are going to be this spike and channel, right? The high of that spike and channel. Okay, but I really have my eyes on the hidden channel. If I take these trend lines here, bring it up overhead, that's the sweet spot right up top there, right? That hidden channel will allow me to sell high. It's also important to keep in mind this measured move, one leg down, two legs down. So as we try to go lower, if we don't get the pullback, if it just grinds lower, we do have to be aware of that measured move. It lines up right with that prior, right, that prior low, that gap fill. The only market that hasn't filled its gap yet is down at 50.72. Remember, that was from earlier, right, in the week here this week. And so we're expecting that gap to get filled eventually, but right now we're more concerned about getting through 52 than anything else. So we know we're bearish. We know we have a spike and channel. Now, we talked about this last week, if you recall, right, in the 4 different ways we trade a spike. Anytime we see a spike and channel, what do we always talk about when it comes to a spike and channel? The base of the channel, right? The base of the channel. The bottom line is once we see a spike and channel, I always keep my eyes on the base, the first pullback on that spike and channel, because oftentimes that is where we make this big move up. Now, once we get that big move up, the bulls are going to try to buy the pullback, and we can then use that as a 1-2 try failure pattern to sell back down in. And again, as I mentioned earlier, I'd like to incorporate this kind of hidden channel, right? That kind of hidden channel up there for that sell off the high. So as I go back to my chart now, there's my spike and channel. There's my hidden channel, right? Here is the base of that channel. Okay. In all reality, we want to get back to the high of the channel, but the ideal scenario would be all the way up around that 65 level. Okay, so if price goes higher here, if we can get up inside that channel, and again, this could be relatively shallow like this, right? Or it could be a lot stronger, right? Like that. It really doesn't matter to me. It's all the same stuff. I want to go up around the high of that channel. Now, as we go higher, I would expect, right, you're going to see some buyers here who will try to buy the pullback. They wait for price to pull back to the moving average, and they try to buy the pullback. This now sets up for one of my favorite patterns. It's called a 2-try failure pattern. The buyers try once against the trend. The buyers try twice off the moving average. Once they try a second time, then we have the opportunity now to sell right into those stops. Where would your stop be if you were a buyer? Probably just below that swing. Right? I'll look for a nice strong signal candle, right, and enter short once the market starts to collapse back down again. Now that's the plan if price goes higher, right? What if it goes sideways here? This happens all the time, right? Head of a major news event, head of a day of mourning, maybe tomorrow, maybe we go sideways here, right? If we don't pull back, right, how do we trade a sideways market? Well, this would be a bear bias, right? Be bearish going into that range. Once we see double bottoms on the chart, we know we have a bear bias into a range now. And anytime we see a trading range, I always like to take the size of the range, use that range to mark up another level of resistance, right? Find that level of resistance, and then use that resistance. 1, 2 for a 2-try failure. Let those buyers try once, let those buyers try twice, right? And look for that 2-try failure. Now, what if price keeps going lower, right? Like we said earlier, we got that measured move down here. What if we don't get a pullback? What if we don't go sideways? What if this thing just keeps on grinding lower? Then what do we do? Well, anytime I find myself in a position where it's too low to sell, I shift my focus from failures to traps. I'll look left, find some prior swings, and look for a trap setup, right, off of that prior swing. So if we do go lower, don't chase it. Wait to use those trap setups, right, as we go lower. So if price goes higher, I'm looking for my 2-try failure. If we go sideways, very similar. Looking for a 2-try failure to use the range expansion, right? The size of the range, that creates resistance. That will give us that 1, that 2, and back down. If we roll lower, we're running out of space, so look for a trap pattern, right, as we go. So 2-try failure patterns, trap patterns, ranges, range expansions. Now, I'm going to keep going here this evening because I want to make sure we get you guys prepped for tomorrow and Thursday. But if you want to learn more about all of these entry patterns, spike in channels, trap patterns, and everything in between, I've put together a free trading class. I'm going to put a link in the upper right-hand corner. If you're brand new to trading, or maybe you just want a fresh look at the markets through someone else's eyes, right? Grab that free trading class. You'll find it to be very educational. You'll probably enjoy it, right, more than any other class you've taken online. Grab that free class. It's in the upper right-hand corner. It's also got a big red button below the video tonight. Grab that free class. It'd be a great time to take it with tomorrow being a day off, right? And that will give you some free time to invest in your trading education. Let's keep going. Got the crude oil ready to go for tomorrow? Now, over to the E-mini. Remember, the E-minis are closed tomorrow. It's going to be weird seeing this market not move, right? It's going to be weird, right? Now, with the close for tomorrow, what do we have going into the close session tomorrow? The S&P is bearish, strong move lower with a spike in channel. The bear momentum tells me I want to sell up at resistance levels. At the same time, this spike in channel, spike into channel, what does that tell us? It tells us, you got it, look at the base of that channel, right, and try to get that 2-try failure to sell back down. It's also important to keep in mind anytime we see a market that makes a large move in one session, like we saw today with that bloodbath going lower, we oftentimes see the following day turn sideways into a trading range. If you see double bottoms start to develop on the chart, moving average starts going sideways, right? You know we have a trading range. If we see a trading range, mark up that range expansion, right? 1-to-1 range expansion. We'll look for that move up and let those buyers try once, try twice, and we'll sell back down with the 2-try rule or the 2-try failure pattern tomorrow. So ultimately, it really doesn't matter, right? It really doesn't matter what we get tomorrow. We're really waiting right now to see what's going to happen as far as prices, right, going higher. So we got to get this thing off the low, right? I want to sell the high of that channel as we go up, right? Strong move up. I'm going to let those buyers try to buy that pullback. Let those buyers try once, let them try twice, and we'll sell into their failure. Now, if we're lucky on this, we'll have plenty of space now to look for another follow-up trade. We have the 2-try failure coming off the highs, 1-try, 2-try, but what do we do if price slips lower? Then what? Well, we'll mark up that low. I'm going to find a new channel by marking up the low first and then look for what I call a hidden channel pullback pattern. Notice where I draw this. I'm using the low of that pullback along with the high of that hidden channel. This sets up for what I call a hidden channel pullback. So a 2-try failure, right, into a hidden channel pullback, right? Those are some easy patterns we can look for here tomorrow. But again, I'd be lying to you if I said I wasn't thinking this thing's going to go sideways. Now, this may end up turning into a range like this, right? It may bounce like that as a range, or it may continue lower and go sideways like that, right? So it may turn sideways into a range here. If we do not see this thing, right, bottom line is no matter what happens, whether this is the range or whether the range is a little bit lower down here, right, either way, we've got to get up off these lows to sell it back down. Let's just say, for example, that this is the range, right? Let's just say, for example, we go up, back down, right, and we're seeing this turns into a range here. If this is a range now we know the plan's pretty simple. I want to use the 2-try failure pattern to 1 try, 2 try, and then sell into that second try. Let those buyers try once, get the pullback, let them try twice. Once we see that second try, then we'll start aggressively selling right into those stops for that collapse going back lower. Now again, if we do go lower, keep your eyes open for that pullback as well, right? So what if we keep on grinding lower here, right? We're not really pulling back. Stay patient. Stay patient. Remember that trap, right? Remember that area up overhead, that channel, right? Stay patient. Look for it to go up. Let those buyers try, and then we'll sell right into that failure. So very important to stick to your guns here on this. We don't want to sell low. We want to wait for that price to go higher here. And if it keeps going lower, that doesn't change the plan. The plan still stays the same, right, where we're going to stay focused on staying patient, right, and fading those breakouts. So whether or not we go sideways or we go higher, we're still waiting for that up, that 1, that 2, and we're back up. Now, another thing you want to be prepared for is how would this market reverse? What would a reversal look like on the S&P 500? You know, all of this was really coming off the back of some bad economic data today. That could easily reverse tomorrow, right? Some rumors flying around with China. Who knows, right? This could easily be turned into a bull market, right? What goes down could easily go right back up. But what would it take to qualify a reversal? Well, I have a real simple way of qualifying. I call it a 1, 2, 3 reversal. And you'll notice there's a little exclamation point at the end of that statement because it does need to have a bit of an exclamation at the end of the move. For example, when I say 1, 2, 3 reversal, what I'm really talking about is if the market's bearish, I first want to see us go 1, a strong move against the trend. Then 2, a pullback to the moving average. And 3, this is the kicker, a strong move, explosively strong, an exclamation point strong, right, off of that moving average. This becomes 1, this becomes 2, this becomes 3. Now be careful because sometimes that initial pullback doesn't pull back to the moving average. If it just does that, that isn't quite the 1, 2, 3 reversal. It still is very bullish, but it's not a set in stone reversal. We need 1, 2, and then 3. Once we get the 1, 2, 3, then I'm going to mark up that high. I'm going to mark up the highs of a possible channel. I'm going to go all the way back to the beginning and find that new hidden channel. And then again, I've got that sweet spot now. That's where I'm now looking for that buy. So the 1, 2, 3 reversal. I'll tell you, reversals are some of the most rewarding trades you can take because when you hit them, they usually hit pretty big. The problem is it's very difficult to predict a reversal, which is why I wait for that 1, 2, 3, and then I look for the pullback from there. Now, believe it or not, we see those all the time in our trade room, and I have hundreds of hours or hundreds of examples of those 1, 2, 3 reversals, and I linked them up in that free trading course. So grab the free course below the video, grab the information icon here in the upper right-hand corner, right, and grab that free course and learn more about those reversals. So now we know what the plan is for the S&P. Let's keep rolling. How about some Nasdaq? The Nasdaq is bearish with a spike in channel this evening. The spike in channel tells me to focus on selling, and I want to sell with bull traps and buyer failures up at the base of that channel. And again, as I talked about on the S&P, with such a large move lower today, we may also see this market turn sideways right into a range. And if that's the case, we'll look for that two-try failure pattern to fade those breakouts. So we know we're bearish. There's no question about that. We make a lower low in price. That tells me it's a spike in channel. I mark up my channel. Where's the hot spot, the sweet spot? The hot spot up around that 69.20 area. Sorry, 69.12, excuse me, right up around those highs. Most important thing right now is I don't want to sell low. I want to sell high up at resistance. Resistance being the top, right, of that channel. You could also do the same technique that I used right on oil, which would mean put a line on it up at those highs, right? And now lining up that low with this high, right? That creates now another level of resistance. You can see how easy it is, right, to find those hidden channels. So that's a great spot there for a level of resistance. Now, I'll be surprised if we get that big of a pullback. You know, usually when you see this much movement in one direction, usually nobody dares take profit because they want to see if it'll keep going, and nobody dares buy it because it's too darn bearish, right? Nobody wants to sell because it's too low, and nobody wants to take profit because you'd be foolish, right, to see if it won't keep going lower. So the bottom line is, yes, we may see this hidden channel here, but it's a little bit unrealistic, I think, at this point, right, in the game. We really have one of two scenarios that we're watching. We're watching for either a pull off this low, get above that moving average, make those buyers try once, try twice, and then we can sell right into those failures, right? Most importantly here, we can sell into those stops, right, using that two-try failure pattern. And then, of course, we can keep it going, right? We can find that new hidden channel pattern, right? Hidden channel pullback off the high of that hidden channel. And again, notice where I draw this, right? Off that prior swing low combined with the top of that channel, right? Those are two easy sell patterns if we get the pullback. We may also see something like this where it may turn into a two-legged pullback. These are very common where we see a nice strong move up, a pullback, and a jump higher from there, right? That will be a two-legged pullback. 1 and 2. The reason why this is important is because it creates a trend line going higher, right? With that trend line, we'll now try to get below that trend line, and you got it, used it as resistance, right? That's an easy, what I call a two-legged pullback pattern. We saw one of those this morning, right, on the S&P. So the bottom line is we got plenty of options here as we go higher here. Two-try failures, two-legged pullbacks, hidden channel pullbacks. If the market goes sideways down here, right, don't forget, if we start seeing double tops, double bottoms, moving average starts flattening out, then what do? Measure the size of that range. That'll give us some resistance overhead, and then we look for that 1, that 2, right, that two-try failure pattern. Let those buyers try once, get the pullback, let them try twice, and again, we'll sell into those stops. And again, we're going to go over a lot more variations of that pattern. You'll get a lot more deeper dive into that pattern when you take our free trading class as part of our free trial. And again, how do we turn bullish? 1, 2, 3 reversal. 1 goes against the trend. 2 pulls back to the moving average, right? 3 explosiveness off that moving average. Now you might be thinking, well, why can't we just buy that pullback? Well, because remember, right, if it was easy as getting above the moving average and buying a pullback, well, yeah, that wouldn't be a successful trade right there. It happens all day long. So instead of trying to predict this pullback's going to hold, right, wait for that pullback to hold, wait for it to hold, then we see it mark that high, and then all the way back down, grab it off that low, right, and bring it up, and then that gives you now that sweet spot, and that's where now I'm looking for that buy overhead. If we get this thing to reverse, I'm not going to worry about this trend line down here. It won't be strong enough to hold this thing back. And if we do get the reversal, right, then we know we're looking for that target back up around that 70-60 area to basically erase this entire move going lower. And again, right, tomorrow, careful with these markets closed. It's going to be a real rough, right? It'll be rough around the edges session. So be very careful if you plan on trading it. Over now to gold, right? Another market that, according to the CME group, will not be affected tomorrow, although I do think all of these markets will be adversely affected just because the bond markets are closed. And remember, the bond markets are the hedging tool that most large trading firms will use, right? They'll put an order on, a position on in gold, and they'll have a negative position, right, on the bonds. The bonds are notorious for being usually kind of the grease, right, that makes the wheel spin in the financial markets. When the bond markets are closed, it usually means everything else, even if they're open, are not going to be very easy to trade. Looking at gold, though, gold is bullish with a trading range and a hidden channel on the chart tonight. The bullish momentum tells me to buy at support levels, and the trading range tells me to find those support levels below the low of that range. My plan then, of course, is to look below the range low, use support levels, right, such as, well, there's my range right there. So what I'm doing is I'm going to take that trading range, bring it down, that creates support, right? That's a support level. I've got a two-legged pullback, right? That measured move, same support level. And again, I'm pulling out the same bag of tricks again, right? We'll mark up those highs, bring it off that low, right? And that is a support level as well. And as if we needed a little bit more to toss on top here, this is a prior level of resistance. It was not used on the pullback. That will be a key level of support as well. So this whole area here is really, really enticing. All we need now is a pullback to allow us in. Strong move up gives the bulls the bias, bulls the momentum into a trading range. What does the trading range tell us? It tells us one try, two try, back up into that range. Now, can I sell off the high? Right? Can I sell off the high? What if we go higher here? Then what do I do? If you want to go higher, you want to sell off that high, it's got to be that nested two try. That strong move up, that one, that two, and back down. Right? It creates that nested two try, that one try, two try. The bottom line is the momentum is bullish, and so I don't want to sell until I'm really confident those bulls have tried a couple times to get that next leg higher. Once I see those buyers have tried twice the highs, then I can fade that move back into the range by simply waiting for those stops to get run below those lows and selling those stops. So that's the plan as price goes higher, right? It's called a nested variation of that two-try failure pattern. As we go lower, if I can get this off of here real quickly, right? As we go lower, same thing applies, right? As we go lower, same thing applies. Excuse me, I'm looking for that strong move down. I want to see that pull back to the moving average. I want those sellers now to try to sell it, right? Let those bears try to sell it. This creates the one, that creates the two. Then we know we're using a level of support in combination with a seller failure, a very, very nice setup coming off of that low. That is a two-try failure pattern. Then again, we'll look for that high to high, bring it down to that low. That creates that hidden channel pullback opportunity, right? So real easy patterns if we can just get this pullback right down to those lows. What if we sit in the middle? Then what? You know, again, it could be a pretty slow day tomorrow with the markets being closed, right? At least here in the U.S. If we do, right, if we do sit in the middle, what's the plan then? The plan pretty much stays the same. It's a one try, it's a two try, and it's right back up in. So not much changes there. Now, what would a breakout look like? Well, you know, I talk about the 1, 2, 3 reversal. The 1, 2, 3 reversal is pretty much the same thing as the 1, 2, 3 breakout, right? Don't tell anybody that. I don't want people to think I'm cheating on you. 1, 2, 3 breakout, pretty much the same thing as a 1, 2, 3 reversal. But there's one big difference, and that is the range expansion levels. So we have our range here, right? Take the range, copy and paste it up. That creates resistance. Copy and paste it down. That creates support, right? With me on that so far? Okay. Now, I need to get through that level of resistance or through that level of support before I can consider this to be a successful breakout. And the reason why I mention this is a narrow range, so it's not going to be that difficult to break out of this range. But if it was a wider range, that's when this would really come into play, right, for a breakout. So what would a breakout look like? 1, 2, 3 breakout, right? Mark up those lows, find that new channel, and sell off top of that channel. Fine by me. Just got to get that 1, 2, 3 breakout. And again, it's got to go through that range expansion. Okay, but the upside. Upside's even better because the upside, you're going with the trend. 1, 2, 3. Again, if we can push through that 49 area, then I can mark up high, high, low of that channel. And now we know where we're looking for the buy, right, off that sweet spot. The prior high, right, and that low of that channel. And if we do get this thing to push higher here, right, if we do see it push higher here, the last couple days, you'll notice, if you look at gold here, you'll notice there's a pattern brewing, right? We see it go up, sideways, up, sideways. So if we do see it run here tomorrow, right? If we do see it run tomorrow, don't be surprised if you see it finish in a range as well. So be very careful, right? Buying high, I always want to make sure I'm buying as low as I can at levels of support. All right, so gold is well under control here for tomorrow, right, and Thursday. We'll see how it sets up for tomorrow. And last but not least, over on the euro. The euro is bearish with a strong move back into the original trading range. Surprise, here we are again. The strong bear move tells me to expect another leg lower, right, and the trading range tells me to fade those breakouts. So my plan is to wait for that next leg lower. Then I can look for seller failures to buy going back higher. There are ultimately two main components on this chart. One is the range. Now I'm drawing a rectangle on this right now, but last night it was a triangle. And we talked about the fact that you really want to pay attention to the edges because that's usually where you'll get, right, those big failure patterns back down in, or in this case, right, a strong move up with a nested to try for that move back in. So the first things first, the range is the most important factor on this right now, right? What does the range tell me to do? It tells me to sell the high, right? It tells me to buy the low. Okay, very, very simple. We talked about ranges quite a bit already tonight on this video already. Now, the other big clue here is this bad boy right here. Right? Big move down, right? Now, nothing is ever guaranteed, but usually when we see a strong move in one direction, we're usually going to see another, at least a very strong attempt to go lower. Yeah, I'll definitely give it to you. Sometimes we do see strong moves that completely reverse, right? It is end of the year right now. There's been a lot of talk back and forth about tariffs and the dollar's been affected. So that's been rocky with that. So, of course, there is always a chance this thing may V-bottom and run back up here. There's always a chance for anything. But we're talking about probabilities here, right? What's most probable, right, for this euro? What's most probable is anytime we see a strong move in one direction, we usually will see another leg going lower. And that's exactly what I'm hoping for. I'm hoping that we get that next leg lower. But before we go calling this a 1-2 try failure, right, I'm going to look for that same basic pattern, right, that we saw earlier. Follow the bouncing ball. Strong move up. That momentum is really strong, so I want to give it some time. Let those buyers try once. Let them try twice. And you see what happened after the second time? That nested 2 try ends up collapsing. I'm expecting the similar situation on the euro going lower. Another try to go lower here. That will satisfy the bear's itch, right, to keep that price going. Then what we're looking for here now is we're looking for that nested 2 try. 1, 2, and back up we go. 1, 2, and back up we go. It's the exact opposite, right, of what we're looking for or we saw earlier on in today's trading session. So I want to buy the low of this range, right? But I want to do it in the most reliable way. And anytime I see a strong move in one direction, I'm expecting to see another attempt to go lower. That will finish off the 2-try rule, but that momentum is too strong. So now it's the 1, it's the 2, and it's back up from there. Now, also keep in mind, too, this could really break lower, right? What if we saw it run lower and then hold that next pullback, right? Yeah, that's a breakout. Absolutely, right? So if we hold that next pullback, that's a breakout. Then what do? Yeah, mark that low, mark the channel, and you got it. We're going to sell the high of that channel because at that point, this is a bear breakout, and we're looking to sell off those highs, again, as we've talked about, right, a few times already here. So we want to buy low. We want to stay out of the middle, right? Stay out of that middle. Okay, what if price goes higher here? Price goes higher, 1 try, 2 try, back down in. Again, 1 try for the bulls, 2 try for the bulls, back down in. Or maybe we get a real strong push that we saw this morning, right? Maybe it runs higher here. Fine by me. It hasn't held the pullback and run yet. 1 try, 2 try, nested 2 try, 1, 2, nested, and sell it back in once they fail, right? Again, if they hold it and run, now we know, mark up that high, mark up that high, right? And you're good to go, right, off the low of that, right, of that channel with the appropriate entry pattern, of course, right? We're not just going to blindly buy the low of that channel. We'll look for traps, seller failures, pullbacks, strength, maybe, right? Maybe strength, but after we touch and run off of that trend line, we could definitely be looking for some strength patterns from there. All right, guys. So don't forget, if you want to learn more about all the entry patterns that we use every day in our trade room, grab that free trading course. It's inside the information icon in the upper right-hand corner. If you're on the blog here at Sideways Markets, there's a big red button right below the video tonight. Grab that button, register for the free class. I'll send you my website, and I'll invite you in behind the curtain, right, in the members section of our website. That way you can learn more about our trading strategy and really get a deeper dive into what we use every day in our trade room. And speaking of trade room, right, with the markets closed tomorrow, we'll be off tomorrow as well. Don't forget, though, if you do plan on trading tomorrow, keep it simple, keep it conservative. Tomorrow is not the day to be going and giving back all the money you've made so far this week. And as always, if you have any questions about what's open tomorrow, pick up the phone and call your broker. They'll be more than happy to help you navigate through some of this choppy, sloppy stuff we're seeing this week. And if you need my help with anything, don't forget you can always email, call, or use our live support right on our homepage here at schooloftrade.com. And don't forget, grab that free trading class. It's part of our free trial. Learn more about our 3 levels of membership, right? Read our frequently asked questions on our blog to learn more and keep in touch. Keep in touch. No newsletter tomorrow night. I'll be back for Thursday night's newsletter to get ready for Non-Farm Friday. Careful tomorrow. Keep in touch. And as always, my name is Joseph. Be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos.